Folks, one of the things we are doing on this channel as we wrap up 2023 and without question will continue in 2024 is interviewing new investors. New investors being somebody less than 5 years experience. If you watch one rental at a time, you might be tired of all the millionaires we bring on that have a decade or 20 years experience. So we're trying to fill in the gap. We're trying to bring on new investors, get their story, figure out what's working, what's not working. And we have the one and only Lattes and Leases. Yes, Soli is here today. How you doing, Soli?
Good. I'm here to spread some Christmas cheer today.
I like those reindeer ears. Those little lights on there. That's very well done. Look at that. Woohoo. Shake, shake, shake.
We start,
Soli, let's remind people what your story is, when it began, what you've done, where you're at, and then we'll dig a little deeper.
yeah, so I started investing in 2020. I live in the Bay Area, so really expensive. And I bought my first rental property in Cincinnati in probably, I think it was like July or August of 2020, so mid-pandemic. I
Okay.
was working in commercial real estate, so I was a commercial leasing broker for office space, and that industry kind of died during the
I kind of died.
just a little bit.
It's,
And I'm not really sure it's recovered yet. So
it's still
I
dead.
it's still tough out there. So I started just digging into residential, like, investment real estate instead. So I quickly grew my portfolio. I bought about 25 or so units in a year, all in Cincinnati. Since then, it's been maybe like 3.5 years so far, and I've bought about 50 units across 3 different markets.
Okay. So obviously you lean towards taking action, right? Clearly you don't go from 0 to 50 in 3.5 years if you're not action oriented. But for a lot of people, frankly, Soli, you probably hear this all the time. That's just too fast for their brains to comprehend. So when you go from 0 to 50, there were probably a couple of inflection points for you.
Mhm.
Why don't we talk about some of those? Maybe it was private money, maybe it was partnerships. I don't know what it would be in your story, but what are some of those things that allowed you to go faster, maybe than the average person thinks possible?
I would say the first one was just a mastermind. Before I even owned a single property, I joined a free mastermind. So we met every single week and we talked about goal setting and like vision boarding and your vivid
Mm,
vision. And it's all things that I don't think that I really heard of in college, but it
okay.
really got me thinking like, okay, how big can I make this thing? How big do I want to go? How fast do I want to go? So that was the first time where I actually put down on paper I wanna buy 45 units by the time I'm 30, and I'm 25, so I hit it a little bit early, but it was
Woo!
it was the first time that, like, if that felt so scary to me, but it was more than just, "I wanna buy 1 rental property and that's it." It
Mm,
was an actual path for making, 45 units, hitting financial freedom by 30 possible. So that was,
okay.
like, the first, I guess, shift as I was surrounded by a bunch of investors. We were led through all of these, like, vision boarding exercises, and I
Mm,
how to set goals, how to create plans, that sort of thing. That was kind of step 1 in getting me
mhm.
to think
So
bigger.
you quote unquote saw it in your mind, and more importantly, not only saw it, but would you say you actually got to the point where you believed it?
I think it was scary, but they always say, like, if your goals don't scare you, then they're not big enough. And
Yeah.
so to me, I put them out on Instagram. I still have the post up there where it was me with my goals and like I will buy 45 units by 30. And like the caption literally says, I'm terrified putting this out there because I have no idea how I'm gonna do it, but I'm gonna
Awesome.
do it and you guys can watch me do it. So that's kind of that was the mindset there.
So again, free mastermind, other like-minded investors at different points in the journey. You saw it in your mind's eye. You took action. You put it out there. All right, now it's out there. Is that Instagram post? Is it pinned? Is it something we all could go see? Or
You can go see it. You'd have to
yeah,
scroll down pretty far, but
so
you'll
it's not pinned. It's not
it's
pinned to
not
the top.
pinned,
Okay,
but it's down there. I only have
okay,
maybe like 300 posts, so you don't have to
yeah,
scroll
it's
too.
not that bad. Okay, all right.
Yeah. Yeah.
Uh, so okay, and again, you're living in the Bay Area. Did you already know that you couldn't do this in the Bay Area? Like you were already on the out of state investing at this point?
I did some math, and so I had about 50 grand when I graduated college, and I was like, "Okay, for 50 grand, if I put down, 3.5% on a property," I can't do math in my head, but, you could buy a condo essentially.
Yeah,
And so and not only that, it's like, "Okay, I bought a condo, I can't rent it out, and
right.
then what next?" Like, I guess I
What
could
not
make
yet.
a house hack, but my money is gone, and I have to just
Gone.
try
Yeah.
to save up some more money. And it had taken me like 3.5 years to save up 50 grand with
Right.
saving everything. And so I was like, okay, I don't think that's going to work. And so some of my friends had some properties out of state, and I always thought they were just crazy. Like, what do you mean? They had never seen it. They have never seen it to this day. They never go out there. And
Wow.
I was like, that is just like a wild concept that you can do that. But when I was doing some math and being like, I can't buy locally, I thought about what they did, and then I was just like, "Hey, how'd you do it? Like,
Mm,
what are the first 3 steps I should take to
right.
try to buy my first rental out of state, and, like, what market should I look at?"
That's an important one, and I think you and I brought that up on your first interview on this channel. There's everybody talks about the core four,
Yeah.
and to me, it's the core four is a secondary function. You have to find other like-minded investors, preferably somebody you know and trust and respect that's had some success or at least has a track record because you
Mhm.
can just shortcut so many things, right?
Right. So they also showed me that it was possible, and I had watched them do
Right.
it for the past 2, 3 years, and when I was ready, I was like, "Okay, I know I can do it. You guys have done it. You're my age. And so why can't I do it too?" So that
Mm,
was, I guess, like the first property, and I bought my first 2 properties by myself. I bought about 4 units through those 2 properties in 5 months. And
mm.
then it was like, "Okay, well, like what next?" I used up
Yeah,
my
I'm out of money now. There goes 50 grand.
Exactly. I'm like, "Oh, it goes fast over there. At least I'm making some cash flow off of it."
Sure.
But that was, the next step is I found a partner, and I went back to one of the people who I knew invested in real estate, and he was 3 years ahead of me, and he had been working for a couple years, and so I was like, "Hey, I don't have no money. I'm really enthusiastic. I have a great market, I have a great team. What do you think about partnering up so that you can teach me
Yeah.
stuff about real estate and you can fund my deals, and, like, I'll do a lot of the work." And
Okay.
so we tried it out with one flip. We flipped a property. Thankfully, we flipped a property in the end of 2020, 2021, so it's impossible to fail in that
Yeah,
time.
it's like the market really took care of you no matter
I
what.
know,
Yeah.
you could make every mistake possible and still make money. So we did that,
Yeah.
and we're like, "Okay," like, we worked pretty well together, and so we ended up buying those, like, 25 units together, and that
And
was
those
like a
25 are buy and hold.
We had a couple of flips in there, maybe like 3 or
Okay.
4, but the rest of them
Okay.
we bought and hold, and that was the second unlock is once I found my community, then it was, like, really finding a partner who could then teach me, show me, and help me finance deals because, again, I was 22, and I had just got a job, so I didn't really have much money, I wasn't really financeable, I needed someone to kind of help me
Yeah.
out in the area.
Yeah. So let's talk about that a little bit because there's probably a lot of people out there that are 21, 22, shoot 25 that have a lot of time, energy, and excitement, don't have the checkbook, right? Don't have the bank account to fund. How do you build a relationship with somebody who might be decades older than you and
Yeah.
has the stroke? How do you build that trust? How do you build the knowledge? How do you even have the conversation um, with someone like that, you think?
I think the first thing is just, like, doing what they say. So a lot of coaches, I'm sure you have coached people, and you tell them to do something, and you never hear from them again.
Mhm.
And you're like, "Well, I just wasted my time and my
Yeah,
breath."
that's why solely I never do coffees anymore. Let me take you to coffee and, pick your brain. I don't do those anymore because they never do anything.
Exactly, and so for this partner, like, he had kinda sorta helped me through my first one, like, he had
Mm,
seen me analyze. I had him double check my math on my analyzing a deal, and I was like, "Is this
sure.
a good deal?" He saw me fly out to Cincinnati, like, he watched my Instagram, and so I think through that, I was like, "Okay, she has listened to my advice, she has actually done something, she is willing to
Mm,
spend 4 weeks sleeping on the floor, renovating her property, she's, like, really taking action and showing it on like, through Instagram," and he was watching me, and he's like, "Okay, like, this girl actually she's not a sayer, she's a doer." And
right.
so, I've already put my own money on the line, I put my own time on the line, and so I think through that it's same thing, like, I've had business coaches who then turn into business partners because over a year or 2 of coaching, it's like, "Oh, dang, this girl actually does what she says, and she's really good at it." And so I
Mm,
think that's kind of how relationships evolve. It is taking if it is that type of relationship, it is actually showing that you're willing to do the work,
mhm.
and then they're willing to actually pay attention because probably only like 1 to 2% of the actual population does the work.
No, yeah, if that. No, you're absolutely right. It's funny. I've raised millions of dollars 2 different times in my 22 years, and the first time, it was even before video was out there, and I was writing blogs, and just like you said, um I wrote 2 or 3, maybe 4 stories about properties we were buying and flipping with our own money, and sure
Mhm.
enough, once you get, the 4th or 5th one out there with evidence and proof and pictures and stories and what you did right, what you did wrong, and just full disclosure, i.e. sleeping on the floor to make it work in your example, people start reaching out to you. I've raised probably 8 or 9 million bucks collectively and never asked for a dime. They
Mm.
just came to me. It's like, "Hey, if
Yeah.
you find the next one, I'll fund it." And it really is taking action and then documenting the action and then going back and documenting what was right and wrong. It's hilarious that people think you always win. If you're not documenting a couple of mistakes and even though you made money because when you bought, you might have underscoped, you might have overpaid, somebody may have stole from you. Just tell the full story. And people are
Mhm.
like, I can trust this person. It's wild to think about.
And that's actually my third unlock was your partner only has so much money. And so I became a real value add because of my social media. I was able to raise private money. People would come to me too and say, "You have been so transparent, showing everything, the bad, the good, the lessons, the ugly, the losses. And
Mhm.
I want to invest with you because I've watched you over the past year or so really take action." Again, it's like so rare that someone actually does
Mm.
it. And that's how I ended up raising private money. So a lot of people's problems are like, oh my gosh, I have no money, I can't scale. And once you realize that money is the most infinite resource, then
Yeah.
really it's like, time is the most limited
Correct.
resource. And then deals are much harder to find than money. And so I think that's kind of the next unlock inside my journey as maybe like a year and a half into investing when I began
Mm.
to raise private money. And that was able to like propel my whole investing career and help me be a real value add to my partners. I have other partners now as well. And I think
Yeah.
everyone could always use someone to help them find money.
No, I agree with that entirely. The other thing that I've seen on your journey, again, stalking on Instagram for all this time, is you're not afraid to change markets, right? Something in my journey, people know I've been in one market for 22 years and never bothered to change. I did evaluate other markets, but I'm like, I'm too old, I'm too tired, I'm not going anywhere else. You're
Yeah.
in multiple markets now. So talk about that.
Yeah, so I started in Cincinnati, Ohio. I built a portfolio of about 25. I now have maybe like 30 or so units over there. And somewhere along the way, I was like managing renovations. I was doing everything, but I was in another type of mastermind and I met someone who owned a construction firm, owned a property management firm, and he was like, "Hey, if we just teamed up, like we could go so much further together." And he was
Mm,
living in a different market in Augusta, Georgia. And so to me, I was like, okay, like tell me about the market, pitch it to me. And it is a little bit similar to Cincinnati. The price points are very low. You can still buy a home for under $100,000. Some of the pros are the homes are built like 1950s,
mm,
1960s. So
okay.
those are significantly easier to renovate than an 1890s house.
Yeah, no doubt. No
Yeah,
doubt.
so I think that was a big win, the price point still made sense, and then having, like, a boots on the ground team was really game changing. So my partner and
Mm,
I were both in California, and we were managing all of these renovations, we were managing everything from 2,500 miles away. So I would kind of fly out there occasionally, get some stuff done, fly back, and it was like, how much more efficient would it be if we just had someone who was already an expert in construction? I had no construction background. So someone to, scope the properties, manage the properties, renovate the properties, and make sure that they were done right. It would just, it would be amazing. It would help us scale more. And it would also just help me focus on the things I want to focus on and take me out of the role of construction management, which is not my forte.
mhm,
So that's why we
mhm.
ended up switching over. It's really more of like, where is your competitive advantage at that
Yeah.
point? We had a bigger competitive advantage in Augusta, Georgia than in Cincinnati, Ohio, and we had the team to support it, and we had a partner who was willing to take on the role that we did not want to take on.
Right.
And so
The day-to-day on the ground. Yeah, boots on the ground. Yeah.
right, and so we all shifted roles, and so I have the partner who invests in Cincinnati with me still does acquisitions, so all the cold calling, the mailing, the broker relationships. My other partner in Augusta, Georgia is boots on the ground renovations, and I handle a lot of the capital raising, investor relations, that sort of thing.
Very, very cool. Well, I'm so curious. You've done so much in the last 3 years, 2.5 years, 3 years. Where are you excited about 2024? Are you nervous? 8% mortgage rates, then 6.5. I mean, there's a lot going on in the housing and lending market. What are you thinking about 2024 and beyond?
I'm excited. I am interested because there's so much chatter about the rates going down. And so I
Mm,
think the minute rates go down, competition goes up. And so I've
yeah,
been really
no doubt.
enjoying, I've actually been really enjoying the 8% interest rates because you can find such killer deals. And so
Mhm.
it's just a window. There are a lot of different windows, there are a lot of different markets, and you just have to learn how to work with each market. And so, when I started investing, it was 3.5% interest rates. And
Right.
all great and fine. My properties cash flowed $500 per month on a long-term basis, but it was so hard to win an offer. You were just like putting in bunches of offers and you were always being beat out, all cash, no contingencies. And so nowadays there's just like homes sitting on the market, 30 plus days, days on market, 60 plus days, days on market. And you're able to get deals at like 30, 40, 50% off listing price, which that would not happen in a low interest rate environment.
No, absolutely right. The other thing, it sounds like some of your partners are doing kind of off-market lead generation, mailers, and the like. How important is that for someone getting started? Can they buy just out of the MLS, or in today's market, you got to get more creative?
We actually buy half of our deals off MLS still. So just by like really, really, what do you say? Insulting offers,
Yeah, disrespectful. Yeah, yeah,
respectful offers. There you go. So that's like I would say for a beginner person, I would not recommend mailing and doing cold calling because it's just like not, it's a job. It's like, it's when you have an acquisitions person and you have an acquisitions department, sure, by all
right,
means. Like we have someone who manages VAs and his job is acquisitions. But
right.
for me, it's like if you're just a single person trying to learn how to invest in real estate, go find people to find deals for you. Whether
Yeah.
that's agents, maybe some wholesalers, maybe just, looking on Zillow, tracking days on market, and you can find deals that way and you will save so much time not cold calling people.
Yeah. The other thing I'm interested to see, this is really your first cycle, right? You've been in this for 3 years. I've been doing this 20 years. There was something I saw in 2019, so right before you got started,
Mhm.
that we're gonna see the pain from, and that is everybody was a syndicator, right? I went
Okay.
to a meetup, I was the featured speaker, and I do those because I wanna know what's got the audience excited, and this was in the Bay Area, so it was tech-based. It was in San Jose, one of the hotels, and it had 100 people there, maybe 80 people, and, like, half of them were brand new syndicators. Never
Mm,
operated a building, never did anything, and the reason I'm bringing this up is I think there's a lot of pain coming to those LPs. They've
yeah.
lost their money already, they're being hit with capital raises, or they're about to lose their money. So I wonder what that might do to the psyche of investors, because there was a time, like you said, when you were doing your first flip, you couldn't do anything wrong. Same
Mhm.
thing with syndications, right? There were people that got in and out without doing anything and made gazillions of dollars. But
Right.
that time is over. The pain is coming. And I wonder, for me, because I never got in that game because I saw the catastrophe coming, I want to buy the deals, right? So
Mhm.
I'm curious solely if you're looking at potentially going big and buying some distressed apartment buildings or multifamily when all this pain finally shows up.
I would love to. I feel like I would love to buy something around the Augusta, Georgia area. There's Columbia, South Carolina down there. There's a bunch of bigger markets. It just is a matter of when those deals hit the market. Like, would I buy
Right.
them here? If the deals made sense, great. If I had a great partner and an operator, sure, no problem. But I think it's just when will that? I haven't personally seen any big multifamilies kind of come
Not
on
yet.
near me, but it's like, is it gonna be a year, 2 years? We're
Yeah.
we're looking and we're stacking cash for that reason too, and we've been flipping a bunch of properties because there is a lot of pain currently, but I think there will be continue to be a lot of pain coming in the future. And so if you can
Yeah.
kind of have those cash reserves and be ready to move and also be very intentional with nurturing your investor list right now because you don't never know when the deal is going to pop up.
Yeah. And one of the things that Olivia and I have done is we've taken on debt-based partners. So they were the
Mhm.
first, right? They were the debt.
Yeah.
We've never had an equity partner. And so that's a different ball game. But we're definitely looking to potentially buy the biggest thing, somewhere between 20 and 50 units. Because again, we
Okay.
want to do it all ourselves.
What
Uh,
market?
well, this I'm so boring. Solely Fresno,
Same
California.
market.
I'm so boring. I got a team. I'm so old compared to you. You're younger than my daughter by a decade. almost a
No,
decade. So, oh yeah,
really?
yeah, she's 32. So yeah, yeah,
Wow.
yeah. So, yeah, I don't have the energy or interest in doing that, but I know the pain's coming, and that's I think someone like you who has the opportunity, the network. To your point, it's not coming tomorrow, but
Yeah.
it is coming. I'll be looking to buy something between 20 and 50 units. There will be bigger opportunities, but I think there's a lot of pain coming in the the commercial real estate market,
Yeah. What do you think about the hospitality market?
like hotels and things of that nature.
Airbnbs, boutique hotels.
So I think boutique hotels. I think there are opportunities for sure. I think Airbnb may have seen its peak in 2020 and 2021. There are always markets that are Airbnb friendly, and there will always be. But I think there's going to be more and more markets that go anti Airbnb because of the housing shortage and things of that nature. So I
Mm,
would expect regulations to ramp up. Um, and for profits to go down on
right.
short-term rentals. Now, if you're going to do midterms, that's a totally different game, right? Traveling nurses, things of that nature. I think furnished rentals, like longer term, is an okay business if you're around the right infrastructure. But I
Mhm.
do think Airbnbs have seen the peak of profit in 2020 and 2021. It's like the perfect storm.
Yeah. I think
I don't
it's
see
been
that coming back.
really tough for people who were in like New York when all of the new regulations came out and
Oh yeah.
overnight they were forced to take down their I've had a bunch of messages inside my DMs like, "What do I do?" And I'm like, "I don't
Yeah,
know."
I don't know. The rules changed.
Yeah, and you bought your property not with any other exit strategies. It's like you either
Yeah.
sell it or you take a loss because you can't rent it anywhere else and it doesn't make any money.
Yeah, it's going to be interesting. One of the things you know about real estate is it's always changing, always evolving. I tell people to watch the real estate market and the lending market because I've been investing so long solely. I remember when you can only get 4 loans, right?
4?
Four.
When was
That
that?
that was 2008, 9, 10, I think. It was one of the outcomes of the Great Recession. Yeah,
Wow.
yeah. So rules can change, that's for sure. Solely, you do amazing work. How can people follow you, find you, do all those great things?
Instagram is the best place. It's lattes and Lisas. And then we also teach people how to invest out of state at the Out of State Investor Academy on Instagram and online.
There you go, Soli. Thank you for being here again. We appreciate you. Happy holidays. You make reindeer ears look good.
Thank you so much.
Got it.